So the global investments market is worth over $1 trillion US, and that's a significant opportunity for investors to diversify their investment portfolios. But there are concerns over those scams and Ponzi schemes, as you've just heard, and they often deter people from taking a bite out of the massive pie. Let's discuss this with Hein Klee from Nedbank Private Wealth. A very good afternoon to you, Hein, and thank you for joining us this afternoon. Let's start with the importance of diversifying into this particular segment of investment.
Good afternoon, and afternoon to your viewers. I think it's critically important to understand what's happened, I think, pretty much since 1994, when South Africa became part of the global village. We had very strict exchange controls. Those were relaxed over the years, which then basically allowed South African investors to diversify their money outside of South Africa. In many cases, when we speak to our clients, it's not so much just of thinking about the opportunity of taking the money overseas and not knowing what to do with it. It really is, first of all, a sense check of what does your current investments look like, and from there make the decision on how you want to diversify your international investments outside of South Africa. You quoted that the international market, is huge. It's over trillions of dollars. But I think the important part around international diversification is that if all of your money stays in South Africa, you're exposed to one currency, to one interest rate, to one reserve bank, if I want to call it that way. So the spreading of your risk is not necessarily in the asset classes that you are buying, but also diversifies the risk factors that can actually have an ultimate influence on how your investments behave in the long run.
Now, let's debunk the myths that are related to that international investing, such as the concerns that you give over your control of your finances, and of course the hassles of tax implications and other administrative issues that you wouldn't necessarily want to deal with.
Look, I think the first thing, you're 100% correct. It's that fear of the South African investor that I'm giving away control of my investments. I think the way in which technology has moved, and certainly the way in which we interact with our clients, is that many of our clients actually interact with their investments when it comes to statements, doing transfers, etc., via an app or internet banking. So I think that fear in many cases is ill-founded, if I can call it that way. I think the second point, as you've mentioned, is the administrative burden, because you need to be a South African resident over the age of 18. You've got 2 allocations that you can take per year, which is R1 million or 10 million rand. For the 10 million rand, you need to be in good standing with the receiver of revenue. You need to apply for a tax clearance. When it comes to international jurisdictions, they tend to be a little bit more onerous when it comes to identifying the clients, the source of wealth. So yes, the initial process is a little bit more cumbersome than what I think we're used to in the South African perspective. But I think there's a lot of fear around that it is a complex process, you lose control, which in many cases is not what we're seeing. In some cases, we are actually seeing clients, when we start looking at opportunities and not necessarily investment opportunities, coming to us as a bank and saying, I would like to buy property in the UK. I've got a child studying there, or I want to buy a property specifically to buy and let. So it's wider than just that section of I want to place investments into the market. It really comes down to ultimately what is the client's goals and what they want to achieve in the long run.
Yeah, indeed. And I suppose building your investment approach and understanding your goals is key to this particular venture, if you'd call it that.
Look, I think sometimes people think the goal is just I want to invest, but I sometimes put it into 3 specific buckets. Yes, the goal to invest is long-term in nature, and that's where the advice of a financial advisor is critically important. It's not just to identify the scams, as you've mentioned earlier, but it's understanding what is the goals. Is the goals for a holiday, which is a year from now? That is a totally different investment or set of investments that you will actually place your money into versus someone that wants to retire in 10 or 20 years' time from now. So that is totally different. The other scenario, which I think we sometimes forget, is that people in South Africa are traveling more frequently internationally on holiday. So that's another goal, but there's another set of parameters that goes around that. And in many cases, we have our clients waiting for the rand to strengthen before they actually buy their currency, before they go overseas. And I think a high percentage, I don't want to quote the number, but a high percentage of our clients actually get it wrong because they try and time the market. I've mentioned to one of my colleagues earlier today, I entered the industries in the mid-90s where the rand was R2.85 to the dollar.
Wow.
You know, we're testing 18, 19 now.
Yeah.
So I've been in the industry since 1994, and I can honestly state that I've never been able to call the currency. So it's something that I've given up on. And I think it's a debate that we also have with our clients. Don't try and do everything on one specific date. As you actually have the ability to use various vehicles, buy the currency as and when you actually have money available to do so. Don't try and time the currency.
And I suppose as a final thought from you, if you will, Hein, how does one even start investing internationally? We spoke about having a trustable or reputable financial advisor who could steer you in the right direction and not those that were perhaps part of this club that you would have seen with this particular scam or what we saw with Bernie Madoff. How do you begin the journey with reputable advisors?
Look, I think the first way and where you can actually start is to go to the regulator's website. You actually have the functionality to search for financial advisors that are fit and proper and regulated with the regulator. That's the first way I would go. In many cases where a lot of our clients will approach us is when they actually speak to their private bankers. So at Nedbank Private Wealth, we have an arm that looks after our clients when it comes to banking, and the other area is wealth management and financial planning. So in many cases, go to a reputable person that you've got a very, very good relationship with, private banker, lawyer, auditor. And in many cases, having that first screen is also a very good filter to actually, get you through the process of understanding, is it a reputable company? Secondly, is it a reputable investment? I always say to our clients, if it sounds too good, always do additional investigations. I mean, if you're getting a dollar investment right now at 5% in US dollars and someone is offering you 15 or 20%, that should be the first alarm bells. I think the internet is also a very good source of research. So is there something in the market that will offer you 20% or 5%? If it's 5%, that's usually a very good indication that whatever someone is offering you needs further investigation.
Thank you very much for those insights, Hein Klee, who is one of the heads there for international investment at Nedbank Private Wealth, joining us this afternoon.